Hey everyone, hope you're well. This is CoinsKid. Just going on to Bitcoin. We've got the CoinsKid crew. So the CBBI, which we keep an eye on, is any confluence or any analysis to up or down or whatever, right now is currently sitting at 40. So it's doing okay. But what we've got in the CBI, which is really, really important, is uptrend structure. So if you remember way back last year, when everyone's ultra bearish, I was relaying to you, the 5 waves of death. I made a video on it, the 5 waves of death. I included the CBBI, included the fact that you've got a 1618 off the bottom, included the fact that you're starting to bust a move above a 20-week EMA and things like that, and you're taking out resistance points. At that point, I said to you, Bitcoin is looking for a minimal 28k, and it got there. It got to the 28k, the 30k level. It's found resistance, and it's sort of caught in a range right now. It's gone sideways at that resistance. So, in my opinion, the trend at the moment that we have to respect from this bottom is up. Basically, I know we've got this big macro ABC, but I think the ABC's in. Basically, I think we've had an ABC correction since April of 2021 in crypto. Basically, on the vast majority of charts, some charts went up, the likes of Cardano and Ethereum, little bull traps right there. The B wave, and obviously, many other coins did. Altcoins. This is what you do usually see on the B wave retracements. Some altcoins break the highs. This is exactly what Bitcoin did, and this is why I think it wasn't a regular high. I think it was a bull trap, basically. And I think this last little flush down there, this was your final bear trap. And what we've got here is a beautiful confluence in this particular indicator as well, that from that point there, when we sort of went dark red right there, we came down in A, came up in a B, which was lower high, and then boom, dropped. So what we was looking at in this particular leg down was 5 waves, wasn't we? And the C wave, and we would keep an eye on that. So there's a theory that we've got 1, 2, 3, 4, 5. You got your ending sort of 5 waves within a C wave, which is typical of a C wave right there. So job done. We hit the green mark too, and that was a fantastic opportunity, relaying that to you, and boom, we bolted in 28k. So Bitcoin's doing everything that was sort of anticipating off these lows right now. So like I said to you, I don't necessarily think we'll melt through the 28k. We're running into it resistance, have some kind of macro correction, which is exactly what's happening right now. And you can clearly see we've gone sideways in a range. So my next leg, providing Bitcoin holds this structure right now, which it currently is, equaling the CBBI of an uptrend, what we're going to look at as a next leg is simple. It's the 47k level. Okay, could it get there? Absolutely. Will it get there? I can't guarantee it. I've not got a crystal ball, but it's simple technical analysis and data that I relay to you every day in the charts. Okay, so at the minute, Bitcoin's not lost any structure for that particular target. If anything, it's looking pretty good. Okay, especially on the daily time frame. Yesterday, like I said to you, get the close above a 10, it'll kind of start to give us clues in the charts right there. So equally, what we're looking at as confluence is other charts, S&P 500, the DXY, things like that, to back up my theory that what we've got right now is a massive vertical loading on Bitcoin, because I think that where we are potentially is this level here. If we draw a line here, you can clearly see we're pretty much that level where we come back in that correction, and then we went vertical into 2021. So I'm looking at this potential scenario right now that what we've had is an impulsive move, corrective move, and right now we've got a vertical that's loaded. Now, why is this vertical coming? I don't know. Is there some kind of catalyst or whatever? I don't know. Honestly, don't know. But what I'm looking at is confluence in other charts right now is a breakdown in DXY and a vertical in the S&P 500. Okay, so let's dive into those charts. But obviously every day, I show the invalidation of this vertical that I'm looking at for Bitcoin. So what I'm looking at right now is a potential impulsive wave 1, corrective wave 2, and right now, providing this structure in this low holds at September low from a few weeks ago, you don't get caught in a larger ABC coming back down like that, then I'm looking at a vertical taking out that resistance. Now, one of the key things we need to keep an eye on is this particular index, because right now this is currently sitting at 40. If this comes up and it takes this high out before Bitcoin breaks its high, then this could be a signal, that this is creating some kind of divergence. At the minute, this is coming up when Bitcoin's not. So if the price action is not sort of respecting this breakout, then this could be telling that the breakout's coming. So this is why I show you this chart. This is stacks of confluence to the upside at this point here. When this was down here in the floor and this was dark green, I said to you, this is an opportunity. So right now, this could be a clue. If we see this chart come up and take out that level in July, and Bitcoin's still crabbing, going sideways into compression like that of an ascending triangle, which it's currently trying to carve out. If it's not broken it, and this is taking it out already, this could be a leading indicator, basically. I love leading indicators. RSI and this particular index as well was a leading indicator that Bitcoin was found its floor and going to do that, before it actually did it. Let's dive into the DXY and see what we can see. We're taking a quick look at the DXY. Yesterday I said to you, please be patient, wait for the closes. It's really easy to fall into any kind of trap when you start to roll. Everyone gets super bearish. When you start to pump, people get super bullish. But it's all about the closes that give the game away. For example, we're coming all the way up here, okay? We've been holding these EMAs for a very long time like a boss on the DXY. We broke out here, falling back to this neckline right in the crossroads there of this resistance point, which is basically a falling wedge. We've broken out, we've back tested it at support, and then boom, this is bolted. But in doing so, what it's created is this potential rising wedge. It's got really, really tight. Equal in the RSI, what we have seen is a breakdown in the RSI. So you've got your resistance point there, your support point there, and then your support point there. And what we've done, we've lost this, the trend basically, this sort of channel on the rising channel on the RSI right there. We've lost it on the third point of contact, which is basically what you do usually see in rising wedges, rising channels. You basically break down on the third point of support if it's bearish, and you break the resistance on the third point of resistance if it's bullish. So this is what we're looking at. And a clue on Friday was, and these are all things that I'll show you in the charts that are tradable if you spot them on any time frame. For example, if this was a crypto project, you got this bearish divergence, okay, on this point here, creating this bearish divergence, and you lost the support. This was an amazing short opportunity, because at this point what you do, you go short, put your stop loss on the swing high to negate, the fact that you get a throwback and negate the trade. And what you're looking at is a technical target of where you form the wedge being met. So it's a short op. If you see these on crypto projects, they occur on any time frame, 5 minute, 1 minute, 15 minute, 30 minute. They occur on so many time frames. Basically, when something's coming up, it runs out of steam and it gets compressed as it's coming up, and then it starts to create bearish divergence and things like that, and it starts to break down in the RSI as well, which is a lean indicator. And then obviously you need to lose the support of the uptrend, which is currently what this has done. So as you can clearly see, it's got really, really tight. You've broke down, you've had a little back test. Everyone's getting super bullish on this chart and bearish on crypto and risk, but like I said to you, please be patient, wait for the close, because at the moment the projection, the pattern that this particular chart is in is this yellow line, because this is exactly where you form the wedge. So in theory, this little breakdown here, we should, in theory, providing it goes to plan, you come up to resistance, you got the back test, you're getting your closes below support right now, which is what you've not done the whole way up here. You've not lost multiple levels of support on this 10 EMA, and right now you are, okay? So this is sort of saying, okay, we're coming in for some kind of correction here. We're looking for support before we continue. So this is an opportunity, isn't it? This is an opportunity on risk, because every time, especially for Bitcoin, every time that this does drop, and comes to the downside, Bitcoin usually goes in the opposite direction. And this is something I relay to you. Just there, we start to break down. What happened? Bitcoin broke out. We start to break down. What happened? Bitcoin broke out. Right now, we're looking to break down. What should happen in theory to Bitcoin? It should begin to break out. This is something we're looking at. It's confluence to any kind of breakout right now. So, let's take a look at the S&P 500. What we need to do in this chart is break down towards the yellow line. I expect Bitcoin to go in the opposite direction. Really simple. Let's take a look at the S&P 500. So taking a quick look at the S&P 500 then, what we've got on this particular chart as an inverse correlation to the DXY is we've got two closes above a 10 EMA where the DXY's got two closes below right now. So we're putting in this sort of legwork right now to say that we've reversed, from this correction, which has began here. So if we take a look at the DXY, I drop it in for you right now, drop the DXY, new price to scale, you can clearly see, look at the bottom just there on the orange chart, okay? That's bolted. And what's happened there? This has been in some kind of correction coming back. So potentially when this is bottomed, the DXY is topped. So if this starts coming some kind of correction, this in theory should come up for some kind of correction if it is bearish. Do you understand? So if this comes in for support and goes again, then this will come in for resistance and go again. But at this point here, we have invalidation and validation, and this is something I show you every day and relay to you. So the invalidation of a move to the upside, and the fact that this is a beautiful bullish impulse, 1, ABC 2, 3, and then right now you're going for an ABC 4, and right now you're loading a 5. The fact that this remains bullish is this red line here. So you're caught between this white line and this red line. Breaking that is super, super bullish for risk. Losing that is super, super bearish for risk. Okay, so you're caught in between. Anyone telling you it's 100% going to do that, it's talking out bumhole. Anyone 100% telling you it's going to do that, it's talking out the bumhole. It's all a game of what ifs and reacting if something happens. So what I'm looking at, at the moment is a little bit of confluence at that particular level of resistance. There's a key leg of resistance, because on the way up, that was resistance, became support just there, then resistance again, support, 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 putting this little bull trap here, and then boom, you've had that whopping correction. Where did the correction go to? Really easy, swing high, look at that. Beautiful. So you've got that consolidation vent right there. You bolted out, you come back to its support, and right now you're looking to come back up and attack the same resistance. Okay, so if we break this resistance, there is a potential bullish pattern that's carving out here. Huge left shoulder. Here's your head coming back up. Then you got your right shoulder coming back up. You take out that white line, like I said to you, is a super bullish statement from the S&P 500, because it equally puts you, a precursor to taking out that white line is taking out the resistance basically. That's your precursor. You take out that white line, you sort of confirming this huge bullish pattern basically called an inverse head and shoulders. So the pattern, the technical target, if you break that, from the point of resistance just there to the head, that's your target, that white line. Okay, so there's a little bit of confidence in this particular chart at the moment, and I show you this every day from the bottom to the top. Like I said to you, the impulsive waves, we usually target the 1618 on this channel, okay? So you can clearly see if we start to come up, it could be a warning shot and a precursor to taking out the 1 fib. That if you start to come up right now and you take out that white line, your technical target is a 1618, which is a technical target of inverse head and shoulders like that, okay? So what you do to find your technical target of inverse head and shoulders, you go from a neckline all the way down to the head, look at that, and then boom, that's your neckline to your head, wherever we break out. So there's a little bit of confidence that the 1618 could be the final phase here for this particular chart, because what I'm looking at right now, if this is an ending move, some kind of big blow off top, which is a theory I've got for risk right now, then we should see 5 waves within the sort of last wave here, because what we've got is a monster third wave here. We've come back in a 4, which held the high, and right now we're looking at a final 5th wave for risk, basically. So with that, we're looking at, the DXY rolling into 2024 and this popping into 2024, which adds confidence to a big upside on Bitcoin and crypto and risk, basically. So we need to see this chart doing what it's looking like it needs to do to get up there. We need to see it doing it without losing the structure and support, and that's exactly what it's doing at the minute. This is why I relay to you, it's not bullshit, it's not data emotion, it's data. I'm relaying the data to you that no structure or support for my big move for Bitcoin and crypto and risk and the S&P 500 has been lost yet. The minute it is, I will alert you. So we're getting the inverse correlation playing out right now, so I can't guarantee that it will play out, but what we're looking for right now is potential inverse head and shoulders on this pattern just there on this little daily chart. So we're into a key resistance of the 10 and the 20 right now. If we start to come back a little bit and we hold this high low, equally you've got an ascending triangle just there, compression, you get a little breakout. You could be attacking that white line. If in the future this breaks this level of resistance and Bitcoin's doing this, or XRP's doing this, or Chainlink's doing this, or Cardano's doing this doing this is going to be a major clue, okay? A major clue that we are about to see huge moves and upticks in the crypto markets right there. So again, I'll keep you updated as best I can. The support for this particular analysis, your bull market support for a big move into 2024 for this particular chart is this red line, and this is why I relay it to you every day. The absolute, the precursor to a major move is breaking that high that we put in way back there in July. We see that high taken out before this low. Wow, kick back, relax. You've got a massive move into 2024, and equally with that, the inverse correlation when you see a DXY breakdown. Okay, so I'll keep you updated as best I can. Let's dive into the Bitcoin chart right now. So looking at Bitcoin on the daily time frame at the moment, we're above the bull market support band, okay, the CoinsKid bull market support. Look at the break above after finding so much resistance on it. There's your resistance, there's your drop, there's your resistance, there's your high low, and then we broke it in a God candle. And what we've done since that break is consolidated, fill in this God candle with that resistance just there. We'll come back into it, and we're currently creeping up the stairs here, aren't we? We're sort of creeping up into resistance right now on the daily EMAs and the 20-week EMA, which is bull market support band. We're above it. So technically at the moment, Bitcoin is looking pretty good on the weekly and the daily time frame, being above key EMAs. Now if you hold these EMAs, this is going to creep you up into the resistance with the potential to break it and go. So there's no bias, it's simple technical analysis. At the moment the data is suggesting that Bitcoin is holding the support and it's going to start to creep you up. So like I said to you yesterday on the daily, please be patient, wait for the close, see what happens. Does it close above a 10? Does it lose it? Because obviously if it loses it, it's starting to look weak, you're losing the EMAs and you can start to cascade through them. But at the minute you are holding this ascending support, creeping you up into this resistance of a potential consolidation pattern into key resistance, which is an ascending triangle. So towards the apex, we will see some kind of reaction here for Bitcoin, whether or not it breaks to the upside or to the downside. No one can tell you with certainty, but it's something, the reaction in which we can trade. Do you understand? So if it starts to creep up and noisy EMAs, we start to hold them, we don't necessarily break down, we are looking at compression leading to expansion to the upside. And this is going to be very tradable. So again, let's keep an eye on this. If we start to see Bitcoin losing the EMAs, losing the 55, losing the bull market support, which is a 20-week EMA, if we start to see it breaking down below that consistently, then the trade is to go short with you stop on the swing low, basically. But right now, you could be building some positions to go long with your stops, moving them up on these wick lows, because obviously we've got this selling of support which creeping them up into resistance, and this is what you do. You build your long position, you move your stops up on these highs, okay, on these lows, sorry. So we've got all this support right now, multiple bullish crosses as this is getting really tight. So there will be a reaction, okay, potentially. What is the date right now? So, you know, over the next couple of weeks, by Monday, you get really close to this apex, we should see some kind of reaction. Now, I can't guarantee that we won't do that, or, you know, we won't do this. I can't guarantee anything. Whatever happens, it's going to be a very tradable event. You know, you can go long, you can go short, you can do all this on buy a bit gets entirely up to you. But we've got an amazing trade coming up. So, you know, what will be the trade if we do break down? Well, the trade will be if we start to close below these EMAs right now, and we lose the 20-week EMA on the daily, and we most importantly lose the 55, which currently sits at, let me give you this target for the 55 EMA. If you start to see a daily close below 27192, I think it really increases the probability that we've got to go short here, okay, with a stop loss on a swing high, because you're losing structure of the EMAs right there, which is really important. Like I said to you, the EMAs are boss, get them into your charts, okay? So at the minute, we are in bullish crosses, we're above the EMAs, so respecting the charts and the data right now, technically Bitcoin's looking okay, especially on the daily, and we're being above this thick yellow line since Sunday the 1st of October, sorry. We're currently compressing, holding its support as these EMAs creepers up, so there will be a reaction. It really is that simple, okay? So get the EMAs into your charts. There is a tutorial on how to drop the EMAs into your charts, okay? Really simple. You know, don't overcomplicate it using a million EMAs. I do like to use a 10, 20 and 55, and obviously what I've done is the bull market support. You definitely want to see Bitcoin above that yellow line, okay, the thick yellow line, which is your weekly 20-week EMA. You know, again, this is why I drop it into this daily chart and many charts, because you most definitely want to see Bitcoin above that. If you are expecting any kind of upside, it needs to be holding that as support going forward. You lose it and turn it into multiple levels of resistance, especially on the weekly, it's not looking too clever. So again, if we break down below this, okay, this could be some kind of little bull trap, and then we turn it to resistance. This is going to start projecting to the downside, but at the moment we've broken above, we're holding the support, it's creeping us up, so we've got to look as a projection to the upside given what it's doing at the moment above key EMAs. Do you understand? So it's not bullshit, it's not opium, it's pure data. Hope you understand that update. Stay healthy, stay strong, stay tuned. Take care everyone. Back to an update on Bitcoin. Bye bye.